We will start our MAO right now. Okay. Honor. Okay, so let me share my screen and let's start our morning MAO. Okay, let's go. All right, guys, once again, good morning to all of you. All right, this is Cal. All right, today is the 26th of May, Wednesday, and today my caption of this morning is very simple, very important, and very direct. Do consider to place trailing stop on your long positions. All right. Now I know that some of you have been buying the stock market, buy the indices for quite a while already. Good, excellent, well done. You have done the right thing, and that should be the right thing to do over the last few weeks. But today onwards, can I kindly share with you that kindly just put your SWL. Now, SWL means your sure win level for TWB students. All right, meaning that if let's say you buy a position, let's say you buy the Dow Jones at 30,000. All right, now the Dow Jones at 34,000 example. Consider to put your trailing stop at about 33,500 or even 33,800 level, nearer to where the current price is. Because to my personal belief is that, right, the Dow or the US equity market may go higher because of whatever Federal Reserve have been doing. But on the flip side itself, right, if there's going to be any bigger movement, the movement can be drastic. And I have a reason to explain this to you shortly. So I just hope that you guys consider doing this. Now, end of the day, if you think that it's not important because you've done it before, and every time when the market goes down, then it can trigger you. Then after you go back up again, you get very upset. Then you can also, ignore this little advice. All right. So once again, I will leave it to you to make your final decision. To me, that is what I'm supposed to do as a responsible trader. Because today is a public holiday, I'm also still working, okay? All right, only thing is this, today there will be no afternoon MAO. I think I need to take a little break. I need to do some of my personal stuff to prepare for other things and also spend some time with my family members. Now, today is a very special day. Excuse me. Today is actually the Happy Vesak Day. All right, today it is the most important Buddhist festival. All right, it's also known as the Vesak Day, all right, or the Buddha Day. It's a celebration of Buddha's birthday, and for some Buddhists, marks his enlightenment, where he discovered life meaning. And it's a time to reflect on his teachings and what is meant to be a Buddhist. So I wish you all be showered with abundant fortune and prosperity, and find the path to internal happiness. All right. So to leverage on this thing here itself, right, is to also apologize that yesterday during our TWB revision class, at the last part itself, right, I got a little bit emotional. I think, everybody got their tolerance of and patience. So probably yesterday, the last part itself, I just snapped, all right? Because end of the day is that, right, I really take my family members, which is including you TWB students, very seriously. All right, I think that I never once rejected people when they come to approach me for questions and ask me to help them. But of course, when they cross the boundaries, and of course, when they actually literally hurt other family members, being me as well, right, I just cannot take it. So I would like to use this today as a good day to reflect and tell myself that, end of the day is this, you don't need to be angry with people, right, because they will pay for whatever their dues is. As long as I take care of myself and the people who still love me and respect me, I think that is more important. So that's why yesterday itself, right, after the little sharing, one of the students, all right, came forward to me, and she really, really, give me a very good, I would say, advice. And she really treated me as like a little brother. I really appreciate that itself. All right. So I really think that, it touched my heart. And today, Vesak Day really reflects all. Okay. So guys, today, whether you are from whichever religion, I think it's a good day to really reflect and think what you can do better for your family members and the people around you. Okay. Right. Once again, happy Vesak Day to everyone. Okay. All right. So with that itself, we continue our MAO. Okay. Now, is the dollar really dead? Now, I've been asked this question throughout the whole entire period. Now, I've been saying this for the US dollar. It's going to be very tough for it to recover, right? But still, there's measurements to be done if they want to do it. All right, so one of them itself is what we are seeing in the market called the reverse repo operation. And this is very indirectly telling you that they are going to do a tapering through a backdoor manner. Right, yesterday I think during our sharing session, one of my student, okay, Benedict, right, he is a very well-read person, very knowledgeable. I love talking to him, and he will be one of the guests that I will be have invited for the 19th of June event. I'll tell you more about this very shortly. But main thing is this itself, right? In my opinion, right, everybody now is marking the dollar down and they think that the dollar is dead. So what do you think, guys? How many of you think that the dollar is dead? If you think the dollar is dead itself, right, you just key the word, to be more positive for this morning, maybe you just put the word sell dollar. Right, if you think that it's a time to buy the dollar, just key the word buy dollar. All right, what do you think? How many of you think that it's time to buy the dollar? How many of you think it's time to sell the dollar? Let me have your answer right now. We have about 45 people. No, I don't expect big crowd this morning because it is a Vesak day. I know many of you want to rest in and they don't get involved in financial market. I totally agree on that. But remaining of you, about 46 of you, what do you think? Is it a time to buy into the dollar? All right, Chong Ming say buy the dollar. Colleen say buy the dollar. Kevin say sell the dollars. Jerry say buy. And Anthony say sell. Okay. And what do you have there? Any more? All right, this Judy says sell dollar. Johnny waiting to buy. Richard Yo, TP buy ready. TP at 90.04. Wow, 90.04. Excellent. Brian say buy. Okay, so I'm going to go to dollar index. So you can just key US dollar index on Google, and you can actually go to Market Watch. Now, Market Watch, in my opinion, is easier, more updated, and nicer to watch. So you can see over here itself, you can see very clearly the last 5 days on the US dollar index. It's been coming down, all right? The lowest it went was about 89.59 level. If you look into the last 3 months on the US dollar index, it's now at the lowest point. If you look at the last 6 months, okay, we are almost near there. The last time we see this was on the January the 5th, 89.44. And today, as we see now, it's at 89.66. Okay, you move some more by 1 year to date. Okay, from the start of this year, right? 89.44 is still the lowest point. All right, consider this. So we look at the one whole year itself. Now, one whole year, the lowest it ever go is still that date, which is at 89.44. So now what we are saying is this: we are just only 20 basis points away from the lowest point since January the 5th. So what I will say is on speculative reason, I suspect that, right, we may see a temporary bottom out in the dollar soon. I repeat myself, I believe that the US dollar may temporarily rebound pretty soon. Okay, temporarily. All right. So Colin says that US Federal Reserve won't let the dollar feel below 89. Oh, okay. All right, so we look at the biggest perspective, like 3 years, like, you know, all of them. You look at it now, all the data coming in. Now, this is a data all the way. Now, in case you say, Cal, is it the 89.44 is the lowest? No. The lowest it ever go was 74.21 back in 2011. And of course, the lower it went on was 72 level. Wow, it's even lower, right, at 2008. But you must understand that during 2008 itself, that was where the Lehman crisis happened. Then after that, in 2011, that's where the dollar crisis happened. So these are the time whereby the dollar really slammed down because of a lot of internal problems. So I kind of suspect that, right, at the moment now, we do see there will be a temporary support for time being. But if the market really allows it to flood, then the dollar will really goes down way deeper, and that will propel the inflation to really hit the economy. So if I were to put this thing now as a perspective here, I will believe that, right, there is a possibility that we will see the dollar, have a temporary rebound first on technical ground. Then that will cause some little shaking in the equity market or the commodities market. Then after that, we will see what Federal Reserve want to do with the dollar. If they really want to really save the economy and pump in more money itself, right, then obviously itself the dollar will go down even lower, and obviously that will create another big problem for the whole economy. But on a flip note itself, right, if the US Federal Reserve has said, okay, you know what, we have come to the point that we have to stop this, we had to do some tapering, whether it's backdoor tapering or whether it's front door tapering or it's outright tapering. If they do that itself, right, the dollar will rise. And when the dollar rises, then of course, again, we will have some initial pain on some of the asset class. But after that itself, right, maybe the market can actually recover. So that is the reason why I'm saying that just be careful, because 89.44 is quite nearby now. And it's not, I say that most likely there'll be a lot of buying at that point when it goes there. So we are just only like 20 basis point away. So it makes sense for traders to be a bit more careful and put your SWL in the right place. Okay? Got the idea now? Okay, we got the idea itself, right? Let's continue. So let's just motivate one another and don't give up, all right? Trust is earned. Respect is given. Loyalty is demonstrated, and betrayal of any one of those is to lose all three. I think this is a lovely, lovely, lovely quote. All right. So if you think that this quote is excellent, please key the word excellent, right, into the group chat. Because I think that this is really good. Because trust is always earned. You cannot buy trust, okay? You can buy friendship. You can buy relationship. I can tell you that. But you cannot buy trust. When the trust is not there or not built yet, it's impossible to be there. Respect is what you give to people, all right? When you respect someone, people will give you back the same respect. Of course, not everybody take respect that seriously, but still, all right, that is given, okay? Now, loyalty, in my opinion itself, is the biggest, most important thing towards me, right? It's the most important thing towards me. Now, the thing is this, if you are loyal to a person, all right, it's an individual feeling. But the thing is that if you demand loyalty from another person, then the first thing is you do something for that person. I think that is very important. And definitely betrayal is something that you should never cross that boundary. I mean, sometimes itself we can make mistake in life, all right? But if you were to do the betrayal part itself, right, I think that is really because you know what you're doing, but you still go over it. And that is sad. All right. So I will tell you this, my honest view is that betrayal is something I cannot accept. Seriously, I know that I have my flaws in my younger days, but I recovered from there. I know that what is wrong. And ever since then, it's all right. To me, betrayal is something that I don't do. All right, this is something that I can tell you upfront. I don't do betrayal. So that's why I want you guys to really think about this. All right, take some time on this and ask yourself, have you earned the trust? Have you given the respect? Have you been loyal? And have you betrayed anyone? If you have done and all these things, you have actually, get it proper in the right sequence, then I'm glad that you are a good person. All right, so let's us work towards this together and never give up. Okay. All right, so disclaimer as usual, once again, today, please understand this. There's a lot of information to share with you, especially for those who are having a long position. You may want to hold back and listen to me until the second part of MAO, because there's a lot of things to share with you, okay? All right, so disclaimer as usual, if you're okay with all these wordings here, all right, you have accepted me and identified me, all right? I'll count to 5 seconds for you to consider. If you think that you cannot accept this, kindly leave this group chat right now. Okay, 5, 4, 3, 2, 1. Okay, so you're staying on means you already accepted this. Now, what are the reasons to stay bullish for now? There are a few good reasons to stay bullish for now. Let me explain this to you. Now, first of all, mainland Chinese market is up. Now, yesterday we saw Hong Kong, right? Wow, Hong Kong went up by 2%, Chinese market up by 2%. So what is the reason for that itself? I couldn't find any reason. I tried to go everywhere, but I couldn't find the exact reason. So if anybody know why Chinese market is up, right, please let me know. Because I realized that when you go through mainstream media in America, right, you don't find them at all. Whether it's Bloomberg or whether it's CNBC, right, they don't really cover that. Now, of course, I can go in. I even tried to go Google. I couldn't find it. Maybe I must go to the Chinese websites to find that. But it's quite interesting that, this sort of propaganda, they don't really tell you exact thing, all right? If the market is falling, they'll tell you, okay? So the thing is that this is the Chinese market now. There is, of course, where we say this, I was asked last time, right, I think about the Chinese market, and I did say that, well, logically, the funds, if there's nowhere to go, they'll be going to one other market, and it's Chinese market, if not gold market. And apparently, it really happened. So, of course, we also saw the Chinese market going up. We also saw gold recently going up. So, is it correctly that the money is going to go there itself? Well, it is very possible because of the current valuation. So, let us see further, and let us watch this closely. Now, Jim Cramer bets that stock will gain from the collapse of cryptocurrency. He believed that all this speculation will end, and he believed that all this money now will move back to the equity markets. So, what do you think? Do you agree with Jim Cramer? If you agree with Jim Cramer, please key the word JC. All right. If you think that you don't agree with him, please key the word no. All right. Let me hear from you guys. Let me hear you guys. What you think? Do you think that Jim Cramer is correct, or do you think that this Jim Cramer is wrong? Let me hear you guys. Please key your answer right now. Okay. Carl say no. Kevin say no. Choming no. Judy no, I assume. Bridget no. Pin say yes. JC. All right. Well, okay. Bridget also say no. Okay. Now, you would ask me itself, right? Definitely, if this money from crypto, if they are moving away, it has to go somewhere. So I cannot say that it didn't go to equity market, because we do see that the moment crypto came down recently, right, NASDAQ, although it's supposed to be tech related and crypto was down, but you see the NASDAQ going up. So it didn't really dampen the mood. In fact, it given more buy side. So indeed, there is some possible transition over. But as I said in the last few MAOs, I did say that, right, I think more of the money has been withdrawn than the cryptocurrency market and then placed probably somewhere, which either can be the Chinese market, gold market, or they just stay on the sideline. All right. Now, you must understand these funds can have alternative. They don't need to put everything back into the market. They can just put it somewhere first to make some money out of it and then just hold on and wait for a while and wait for a better time to look into the market. So I think say no. All right. Then this Susan say no. Fred say no. Brian no. And Yuming say yes. Jerry say yes. Okay. So that is what we are seeing right now. But while we are saying all this is right, you can see at GME, GME, the counter again has gone up again. Wow, look at it. GME stock again shoot up all the way to $200. So that means that, again, there's some speculation that some of the money is actually going into the equity market for speculative reason. And of course, we all know that GME is a very corner stock. So anytime the boys are ready, they'll go for it. Of course, the Reddit side, they're also doing that at the moment. Then you can see the dollar index itself, right? You can see very clearly, even though it was recovering recently, but then the data come out, right? The confidence is not there. Straight away, the market has this impact. But if you look at it in general perspective itself, right? Although the dollar index has been coming down, or overall is still weak, but if you look carefully in terms of the whole perspective, you do see that whenever it comes to this area itself, right, the market do stage a bit of rebound. So that is the reason why I said that, right, there'll be temporarily support around this area here right now. So traders, I will suggest you not to go too deep onto the dollar on the short side for time being, okay? And of course, you can see the 10-year yields. The 10-year yields, after the first payroll, it recovers above the 1.6%. Then the CPI numbers and FOMC minutes propel it higher. But incredibly, right, because of the last few days, we can see that is again possible bond buying that drive the yield all the way down from 1.66 to all the way 1.56. So that means that someone has put in a lot of money into the market to drive the treasuries up and bring the yield down. So obviously, we know that this particular person who had the power has to be the Federal Reserve, because I don't think that it is the confidence that bring the index, the dollar index down so much itself. Okay, I don't think so. Right, so it's more than that. It's more of artificial. So as long as the yields are not going up, there's no technical inflation on the book. That means whatever Federal Reserve are doing is actually correct. So the question is this: the Federal Reserve can continue to do this, but the market also have fatigue. If you keep on doing the same thing repeatedly over again, like a good joke, the joke, it can be funny. You tell one time, we laugh. Tell 2 times, we laugh. Tell 3 times, we will still laugh. By the time of 10 times, the same joke, then probably we will stop laughing. And that is where I'm saying right now that we might be at this point whereby we may not want to laugh further. And when that happens, it's all right. But the 11th time or 12th time, the joke comes again, probably one may get upset, even though it's a joke. Can you understand my point? So that is the reason why I say that we have to be very careful moving forward. All right, so what we have here is very important. You can see gold shoot up all the way. Gold prices shoot up all the way. All right, so we saw the first pull up. Then it went sideways for what is a 2-minute chart, by the way, and then gold closed near to the 1900 level. Now, I said that gold will go up, and indeed gold went up already. A little bit too fast, but no choice. That is how it works. And of course, silver price also went up. Silver price also went up to $28. So the thing is this, my friends, okay? 19th of June, 2021, which is next month, Saturday, 11 a.m. Please be around if you're interested to go into gold trading, because I will be telling you how I'll be sharing with you, in fact, all the good reason to be involved in gold. And of course, I have the student Galactic. He will come in and also share his own personal view, and he'll tell you, he'll share with you a lot of great stuff. Right? I learned a lot from him. And of course, we talk about silver. All right, silver is another counterparty that I think that it will be going up together this time around with gold. So I kind of suspect that, right, there will be a bigger movement in gold and silver in the next 6 months. All right. So at this moment now to buy, I would say that go slow because we're near the high. Later during the MAO technical part itself, I'll explain to you why I'm not that keen to buy at this price right now. But I'm very confident that if a price of pullback, of a good pullback, it'll be a good time to buy into gold. So please make sure that you tell your friends, 19th of June 2021, get your friends who would like to do gold trading or involved in gold trading, tell them to join this talk show. All right, this talk show itself, right, how it will be presented, right, we'll look at how the COVID cases in Singapore, how it present. Either we do it in physical like we've done last time, or we may have to do it in Zoom, depending again the COVID situation in Singapore. All right, but time is at 11 a.m. Okay, cool. All right, so the thing is this, sorry, I didn't, wait a few minutes. Miss out the animation part. Sorry, one. Okay, so now the thing is that on CNBC, they are saying that gold is still relatively cheap and could surge towards the all-time high level. Now, this is actually coming out from one of the strategies. He says that right now, gold high was about 2063. That is the gold spot for us on AIMS. Is 2074. And now the gold is about 1,900. So he says that, right, this guy from TD Security says that the market, she said, Richard Kelly, all right, okay, so should be a guy, right? Okay, all right, so the thing is this, this analyst is saying that there is more upside to go. All right, so this person, okay, really cannot really figure out Richard Kelly, should be Richard, right? Richard's a guy, Kelly, I think, yeah, okay. So the thing is that this person is saying that, right, the gold phenomenon run up over the course of last year, there'll be more moving up. And the thing is this, even JP Morgan has informed the institutional investors to ditch Bitcoin in favor of gold. Now, this is classic. Now, JP Morgan was telling people to buy Bitcoin in May. Early part of May, they tell the investors to buy Bitcoin. And then after that, Bitcoin came down. So now they're telling them to ditch Bitcoin and go into gold. Well, let me just refresh your memory. Early May, that was where the cryptocurrency was at the high. Then after that, from then onwards, we saw cryptocurrency coming down by 50%. Now, gold is at the high for the last 3 weeks. And they're telling people to buy gold. Now, sometimes I wonder, is that right? It will be very sad if you are here a JP clientele. Don't you agree? I know if you actually go into conspiracy theory, you know that JP is actually a very interesting company. So all I can say is that, right, when I see something like this itself, I'll tell myself one thing, okay? If gold goes higher, good, that means that we are the boys. And if the gold price do come down, it's kind of expected because that is where there's a seller-buyer market. So if I don't sell something to you, you won't be the buyer buying it. You get my point here itself? So that is the reason why I share this with you, because it's on the news, but kind of not very confident with this. Okay. All right. So, sorry. All right. So let's just go into global news right now. But before that itself, right? Can you ask how many of you are very confident with gold? That means that you think that gold will go up to $2,000. All right. You think that gold will go up to $2,000? All right. All right. What do you think? What do you think? Do you think that gold will go to $2,000? If you think gold will go to $2,000, please key 2,000. If you think that gold will go down, just key the word down, DOWN. All right, let me hear you guys. All right, Fred, indeed, news is for public. The client will advise differently. Well, maybe true, maybe true. I say maybe the way the structure is that, we tell our client this and it's already shown, but all the premium clients, they will probably do another thing. And obviously, it's this is how the market works. They have to push the market all the way up first. Then they tell the richer clients to do this. For the not so rich clients, probably they tell something else. So that is always what I see in the financial market. All right. So what we see over here, let me just check your inputs here. Judy say 2,000. Oh, sorry. And then Carl 2,000 before it falls. Fred 2,000. Yuming 2,000. Pimpin 2,000. Marvin also 2,000, Brian 2,000, so Kevin, then Colin different. Colin say you're down first, then up to 2,000. Johnny also say it's down first. Anthony say 2,000 before coming down. Then Jerry also 2,000. Brian 2,000 also. Susan also 2,000. If I miss your name, apology. Because sometimes a bit fast. All right, Bridget down first. Okay, so about 75% of you guys think that you go to 2,000. Some of you think that you have to go down first. Okay, again, this is how we do market consensus. Nothing wrong, nothing right. As long as we are best genuine with our sharing, that is most important. Now, morning MAO is about this. Okay, it's about genuine sharing among us. We just have to share our views in the market, and we took it as a consensus view. And we don't be like those analysts. They say A, but actually they meant B, that thing. So we don't do that. We do it really exactly how you feel. You put it here, so everybody here can understand this. All right. Wow, Richard Yo has just given a strong, valid call. Wow, a strong call, in fact. Richard says that it will go down to 1,006 before heading to 2,000. Wow, so now it's like 1,009, right? So that means that another drop of almost 20%. Wow, oh my God, that would be incredible. Buyer says that down first as our mother need to buy. Okay. Marvin, July is a number, there might be a chance, okay? Chance to go up or go down. Marvin? June falls and July, August up. Wow, okay. Okay, gold moving up. Is it gold moving up now again? Yeah, gold has went up above 1920, not 1902 already. Yeah. Wow, okay, all right. Gold is now 1902 already. Yeah, just let you know. Yeah, there's a shoot up. Okay. Yeah, indeed. Okay. Wow. Okay. Big boys. Okay. We'll come to that very soon. Okay. Thank you guys for your sharing. So that is what we do here. We have not only MAO can be one direction, which we two direction like that. I can listen to you. I can hear you out. Then I can also think back whether I'm right or wrong. Okay. But of course, we mustn't deny that US confidence fall as job income prospect app. So what happened yesterday? Now, yesterday we saw that US consumer confidence fell slightly, all right, for the first time this year. Now, why is that so? It's because now the Americans are feeling less optimistic about the future job and income prospect. But the thing is, isn't that we were told that, right? Now things are getting better. More Americans are able to step out, and then they are able to, go back to their job and go outside. Isn't that should be better? So I kind of shocked when I see this data here itself. I mean, the number isn't very bad different, but it's supposed to be better. So this is something that I'm quite concerned for. And you look at it itself, right? Overall, you can see that the consumer confidence index, right, is actually rising. But it's just that at the moment now, it seems to taper off a little bit. So not too sure what is the reason at the moment right now, but maybe one more month, we will see a better number. And if the numbers still continue to dip right, I think that is where things will get a little bit dicey. All right, so we will watch this very carefully. But of course, Fed Daly says that, right, there's nothing to be worried about. The economy is strong. Now, this week itself, wow, at least 10 direct or indirect Federal Reserve officials are involved talking in the news. It seems that every time recently I've been getting very, very often to hear these Fed officials coming out and keep on reminding people that all this is transitory. There is no reason to be worried about inflation, and it's all good news. There's nothing to be worried about. And this is her and saying that, right, inflation is just a normal. Now, I buy you that inflation is normal because when you pump in a lot of money and you want to stimulate the economy, there will be inflation temporarily. It's just like, give you a visual idea. It's just like now, you want money. I give you, let's say, $500 million. So obviously at this moment itself, you spend and spend and spend and spend, right? And the friends around you know that you have the money. They'll increase the price for you to make more money out of you. And that is what actually really happened. All right. So that is where for time being. But after a while later, when the money really stopped for a while and you are really at that level of happiness, then maybe this will stop. That's what I try to say, this transitory period. So her point is this, all this thing itself is just only for a while. And at the end of the day, once this bottleneck is over, we should be able to see things get to normal. And after that, things will be okay, especially when the pandemic really ends. So I will buy her on that point of transitory, but I will say that, right, it all depends on how much the economy can take it. But I'm very, very, very worried is that the current valuation of the stock prices right now, because we can understand that with inflation in this type of pumping exercise, but if you still don't taper off and let the equity market rise in this manner, there'll come to a point it will hurt a lot of people. And this hurt can be at least between 10 to even 20%. So that is the reason why I got a bit of worry on this. All right, so we look at the numbers right now. You see the forecast of about 119 based on some of the consensus, and the final figure is 117. And the new home sales was supposed to be at 970, so it was supposed to be higher, but instead the number gained lower. So it does show that, right, the American economy is not doing as well as what you're seeing reflected in the stock market. So guys, you have to be very careful moving forward. And I seriously think that you should put your trailing stop in place. That's what I've been saying this morning. All right, for the Dow Jones last night, you can see that initially went to 34,500. Now, I did tell you guys, every 500 will be a good level to put what they call resistance support level. That means that now, if let's say the Dow is at 34,200 here, then 34,500 will be the first resistance, 35,000 the next resistance, and so forth. So for support, it's the same thing. Now, if the price of 34,300, then the first support psychologically is a 500 marker. Then the next one will be 33,500. You got my point? So every 500 points for the Dow Jones right now is an important marker for resistance and support. So when the Dow Jones went to 34,500, I shared my friends say it's time to take some profit off the table. And fortunately, they do that. And of course, they basically got at the high. They got at the high. And after that, they sell, right? Towards the second part of the day, we do see some selling. Now today, there was no buying up. Apparently, there was some more selling towards the end. Now, although the selling came in, right, later in the second part of MAO, you realize that the volume is not there. Quite scary. So that's why we need to be very careful. Oops, sorry. Forgot to do this part animation. Sometimes when you have so much thing to do, you just can't forget. Sorry about that. Okay, Okay, so let's just do a recap of what happened in the US market right now. The US market shows very clearly that the S&P erases all the gains this morning, all right, and it's traded slightly lower. So is it just a temporary stall for further upside, or this is actually a turning point? So I explain more to you later on during the technical analysis part. All right, but first of all, let's understand the fundamental. The fundamental shows that, right, big tech like Apple, Netflix, they actually erased their earlier gains and dipped into the negative territory. So this is not a very good sign. Now, Amazon, of course, came under a lot of pressure from Washington, D.C. because of the e-commerce onto the antitrust grounds. This has always been going around on Amazon. Nothing has changed, okay? Because Amazon recently had practiced, they raise prices for consumer and suppress innovation. So that causes a little bit of problem here. Because we understand that America is a free country, freedom of speech also. So that's why they actually have this thing ongoing. All right, but Tesla itself, right, actually also fell 0.3%. But interestingly, Coinbase gained up. Coinbase went up because JP Morgan called for buy. Wow. So when Coinbase goes up, right, I thought that Cathie would be very happy, but the share price didn't reflect. I'll show you shortly. And of course, overall itself, right, it seems to be COVID cases are dropping, and that's why there are still companies like those who are doing the general stuff, epicenters, counters, they are recovering a little bit. So overall itself, right, people are saying that the inflation has created some calm in the bond market, and of course that also, because of the commodity market, it drives the stock market, in higher. So overall itself, right, even though there is inflation anxiety, but still it looks pretty good. All right, it looks pretty good itself. Okay. All right. So what we can see right now is that this is what happened. So let's take a look at the market right now. This is the market right now for this Coinbase. Now, Coinbase really went up after JP Morgan gave the very strong buy signal. But you notice that after that itself, right, this ARKK, all right, didn't really move. It went at the high of 110.77 cents, but eventually pulls back down all the way to 108 level and eventually ended flat. So although they bought a lot of Coinbase, but it's not able to reflect on ETF side. So that means that, right, although they bought a lot, but the general of the other portfolio is not really moving. And that is the reason why it seems to be that the selling is still going to continue on ARKK. And this is pretty scary. And of course, later on, I'll tell you how if you are this Cathie Wood, right, you may feel something that is that maybe the whole world's against her. Let me explain to you why later on this Virgin on one of the counters that she bought recently. All right, so look at the news right now. The news are saying that, okay, overall, because of the consumer sentiment, consumer confidence, there is some profit taking, and because the housing numbers are also down, so all these actually weigh down the equity market. And of course, confidence and these home sales are down, usually are not a very good thing to happen. And this is whereby I need you guys to be very careful on this itself. So would there be a change that the funds are going to do gold trading later on? It's a small possibility. So that's why we look at the market shortly. Okay, so let's look at the market today, yesterday's, and let's just do a bit of recap. Now, yesterday, gold opens here. Dow Jones opened here. All right, the KSI is red in color. So ideally, if it goes above OP, it should be going towards the pivot 1. But because the KSI is red in color, KTR +1 to KTR +3 will be a resistant level instead. And of course, if the market goes below OP, right, then of course, to go down to KTR -1 to -3 is a possibility. So let's just take a look right now at what happened in the market. So yes, indeed, we see very clear stuff. The market basically was sideways throughout the whole day. Then after that, a BNB appeared. And a BNB appeared, you put the top line, it's a CCYR, and obviously straight away itself, right, the market goes down all the way and top and trip this KTR -1, exactly what I told you guys. So of course, it did not go down, it went up from here, go back up to the opening price. But of course, the selling towards the second half of the day really bring it back down to the lower end. But what's incredible is this, as you can see, whenever the KSI is red, right, when the market breaks below OP, the probability of hitting KTR -1 is very high. So vice versa, if the KSI in the green, or the KSI in the day chart is green in color, and the market goes above OP, do you not realize that going to KTR +1 is usually very high? So for those who heard me just now, do you agree what I just said about how you use the KSI and the KTR to trade? If you heard me, please key KSI. If you didn't hear me, you didn't heard me properly, all right, then you just, wait for the response. Let me see how many of you guys heard me just now when I talk about this KSI thingy first. Right, as I'm speaking right now, gold is trading about 1903 right now. Congratulations to those who buy. I did tell you that gold will likely test 1900 yesterday. Now 1903 or 04 is actually one of the level to watch out for gold. Okay. All right. So wow, so many of you have heard me on the KSI part, so I don't need to repeat, right? Right, that's why I tell you this, if actually anybody have the indicator at home, you pay $96, it's not to pay and make us better or richer. If you look at it from one perspective, if you notice that as long as the KSI is green, and the market saving over OP and haven't hit the KTR yet, any CCROI that you think that is good enough, it will likely go to KTR plus 1. That profit itself is quite sizable. Of course, you can practice X profit taking. That's a good idea. But you can use the remaining X to aim for the KTR. That will increase your bounty, right? So consider doing this. Next Tuesday, we will do a bit more coverage on this KSI and KTR thingy. Okay? Excellent. By the way, Richard, there's some requests on the site. People text me on the site, not here on Facebook. They want to know, why do you call the gold to go 1,006? Now it's at 1,009. What is your reason for calling the gold to go down 1,006 first? Can you give us some of the reason if you don't mind? Of course, if you basically have some reservation, I understand. But if you don't mind, the crowd here, I just received text message directly to WhatsApp to me saying that, how come Richard said 1,006? So I also want to know, although I also share a little bit of my same opinion with you in the direction, but 1,006 is not in my list. So can you tell me what is your reason for calling for that? I would love to learn from you. Okay, we will now cross over to the live market right now because the Hang Seng is going to open very soon. Okay, Hang Seng is going to open soon. Let's check the Chinese market first. Now, China market today now is trading slightly lower. It's trading slightly lower right now. It's below OP. Now, yesterday, Chinese market stayed at the higher level. Like I say, I don't have any reason here, okay, for why it went up. If anybody have found the reason, please kindly update us on the Facebook. Okay, all right. So, but the thing is this, I would like to share my 2 cents worth. Now, normally when the market is a downward trend, right? Usually closing at the day high, I don't like it, because if it closes near the day high and if it doesn't have follow through buying, right, that means that this is actually more of an artificial push to dump. And we've seen it several times before in the Chinese market. So today, the OP is a very important level. All right, Hong Kong has just opened now. Let's take a look at Hong Kong. Hong Kong has gapped up. Okay, Hong Kong has just gapped up this morning. Opening price is 29,038, but the opening price of a flat top at the moment right now. Yesterday, it closed at 28,970. So today, gapped up by about 60 points. So you can see that even the Chinese market is down, the Hong Kong market has its own view because NASDAQ is up from the opening price this morning. So with the Hong Kong market going up itself, right, the question is this, will this go continue? Well, based on what we're seeing right now for Hong Kong, the moving average today is at 28,529. So based on this, it's still pretty far away. So the upside may continue as long as the NASDAQ, in my opinion, goes up. All right, and of course, if the Chinese market recovers today's selling, then there will be, again, we may resume the upside. So for Hong Kong right now, it's trading above OP now. So that shows that there is strength in this market. All right, in my opinion, it's all right for Hong Kong. It's still on the long side for today. If you look at Hong Kong chart right now with our TWB system, you can see that Hong Kong today is actually between the two pivot 1 and pivot 2. All right, so if Hong Kong can stay above OP, in general perspective, there should be more upside because it's a KSI jump. It's a KSI jump on the Hang Seng, and it's above pivot 2 at the moment. So above OP, in general perspective, is still a buy. Now, of course, if Hong Kong goes below P2, then do note the KSI is green. So even the downside, it becomes kind of be limited unless globally they're selling across the board. So at this moment now, Hong Kong is still okay, right? No much movement at this morning now. So we will watch this closer. All right, okay, thank you. All right, Richard has just replied and he says that the reason is because of Elliott wave movement. Okay, so I know Richard, he used a lot of Elliott wave. I'm not an Elliott wave expert here, so I will not challenge him. So my view is that, right, if let's say, if I'm right in general market fundamental sentiment, right, if there will be any pullback on the equity market, I also believe that gold will just follow through. But the downside may be capped and limited, and then after that, gold may go even higher. I'll explain to you when I go to the technical part on gold later. All right, so I've done my Dow Jones sharing. Now we look at the entire TA of the market right now. Now this is the Dow Jones chart you can see this morning. Now Dow Jones chart, right? Let me explain to you my little bit concern. I bring away all the lines away first, just to show you my first concern for the Dow Jones chart. Okay. Now this is the Dow Jones from the highest point at 35,092. and it drops all the way down to recently hit the 95% mark. So obviously it's right, the 95 stage, a very strong support. So that means for sure, you can be very sure that at this 33,338 is a very, very instrumental key support level. So if the market is come nearby it or go and touch it and recover, likely the Dow will go up, right? So that is why you see recently the Dow came down, but it was not low enough to hit 33,338 and rebounded pretty strongly. So this part we understand. Now, what is the concern that I have? Now, if I look at the Fibonacci of this, I take the highest point and drag the lowest point. Now, you can see now we have this very interesting phenomenon. Now, look at it carefully, everybody. I take this point A, this is point B. All right, so A to B, then with the Fibonacci. So 61.8 is always a very important technical level that traders use. So you can see that once you go to 61.8, right, the market pulls back down. Can you see that? First wave. Then after that, from here at 23.6, it go back up again. And again, it hit the 61.8. Now, yesterday, when the market closed above 61.8, I kind of expect it will go higher, which indeed it happened. Yesterday, indeed it happened. But the closing was something sad. The closing was actually down. So that's why now I will say that this 61.8 become a very important level. And now this morning, we can see a little bit of sign that this 61.8 become a very interesting resistance. So if that is right, this 61.8, the figure, we clear up the screen, is about 34,400 level, around there. Right, 34,000. Sorry, Jimmy, I haven't had time to go and put the money order yet. Okay, 34,400 level. Okay, so 33,3338. 33,338 will be the so-called support. So basically, now we look at the MA. The MA today is about here. And this figure, let me just confirm. Put it in. Wait, sorry, change color. Around here, which coincide today the 50% mark, by the way. All right, that is about this point here is about 34,185 around there. So today the three numbers to watch out for will be 34,400. So if the Dow Jones cross 34,400 again, it will cross the 61.8 level. The Dow will go higher. Okay. So 34,400. Okay, we are just nearby here itself. Then the MA30 is 34,185. That is the moving average, which we saw very strong support the last few days. So that's why if the Dow Jones come down, right, 34,185 will be a very strong support in the market. Then the only thing that if the market do lose 34,485, then the next number to watch out for is 33,338. That is the 95% mark. All right, guys, so you get all these numbers for yourself. Okay, please take note of all these numbers. This is for the numbers for today, right, for today. All right, so take note of that. Okay. All right, so that is what I'm seeing now for the US Dow Jones for today. So kindly take note of that. Okay. All right, so that is why I have my concern. The weekly chart itself, right, still looks good at the moment, still holding up the support level. So I don't see any reason for concern for time being. All right. Then if you look at the today's Dow Jones. Now Hang Seng is trading higher now, trading above OP right now. China A50, let's take a look, is still down. So it seems to be doing the inverse of it. So at the moment now, there is as long as the market stays above OP, in general perspective, it's going to be more upside like the timing. Now the Dow Jones for today, I want you guys to be very careful because I want to tell you my personal view on this. The market has been going up for the last 5 days, and you can see in a way through the movement, although the net change can be down for yesterday's market. But the KSI, you can see very clearly the selling is reducing, but the KSI is still red. So I will say that please make sure that this is the low of yesterday. Now the low of yesterday is 34,261. This will be a very important level to watch. If the Dow Jones is to have support for today, based on TWB chart, right, it's 34,261. If the Dow Jones stays above that, that's fine. But if the Dow Jones break below 34,261, usually there will be some selling. And the selling may, because it's due to the KSI. So 261, right? Remember this? I'm going to now bring you guys to the 15-minute chart to show something that I want to go live with it. Okay, so this is the Dow Jones right now. That is still moving above OP. That's good. If you make the chart a bit smaller to get all the KTR, you will notice that 261 will be somewhere around here. Right, 34,261 will be somewhere around here. So if the market later on do come down and break 34,261, the next KTR level is 24,204. All right, so there is a possibility later on for those who want to go for it. If the Dow Jones do break 34,261, there should be a sell down or a spike down to 34,204 later, if let's say this actually really happened. But as I said, fundamentally, it's a bit tough for the Dow to be down. But technically, if the market loses 34,261 today, the probability of the Dow hitting 34,204 is possible. So traders, this one it's a little sharing from me, so you can just take note of that. At the moment now, all looks good. Okay, so there's no real concern for time being. So you don't need to jump into the market right now. Just take note of these numbers that I just shared with you. Okay, so NASDAQ, well, NASDAQ is still very strong. Today, the market shows that the MLP today is about 13,665. So it looks set to go higher for the NASDAQ. The moving average is around here today. It's about 13,522. So NASDAQ seems to be fine, right? Even though the Bitcoin is not really moving, there was some selling yesterday, but the market doesn't care. So seems to be good. Okay, now this is one part of it. Okay, let me remove down the lines again. Okay, so we have the recent high and the market pullback, right? So if we do the same thing for the NASDAQ, we do the Fibonacci. Now you can see that the NASDAQ has crossed the 61.8 level. It has crossed the 61.8. So in short now, as long as the market can stay above the 61.8, right, that means that the market going upwards is still very high. The 61.8 itself is a 136,633. Okay, sorry. Okay, this is number to watch out for. So as long as NASDAQ overall is okay, that's fine. But 13633, you have to watch, okay, because that is the Fibo level. All right, and okay, there's something there. So right now for you, 13,633, 13633. Okay, that will be the level to watch for the NASDAQ. Okay. Okay, so all clear? Okay, all right. So NASDAQ today, day chart, looks good. All right, opening price between the two pivots. So KSI green above OP is a buy already. Above OP, CCRY is a buy. And of course, you can see from the very beginning, the market goes up already. Right, this is what you see. So that's why when you know your KSI well, you know your OP well, and your pivot well, it's quite easy to make some pocket money on a daily basis. You just have to keep on doing that. Of course, in the morning to trade, you carry risk. Maybe later on, you can look at it again. All right. So overall, looks okay. All right, looks pretty okay. Just that there is a KCB around 13,723. We have to watch it over there, but overall, it's still all right. Now, S&P 500, you can see very clearly that although the S&P pulls back, but today, this morning, has almost recovered all the losses. So it seems that the buying strength is still there, very clear. If we do the same thing on the Fibonacci, from the high to the low for the S&P 500, you can see very clearly now the 61.8 is right here, much lower. Okay, and that's above the moving average. So that's why, as long as the S&P stays above 4160, there's no reason to be worried about 4160 level. Okay, so I can write that for you. 4160 is a very strong support over here. Right, once you see the market support at 4160, for last two occasions, the market goes up. So that's why we should watch 4160. And you look carefully on the S&P. Let's take a look. You notice that this area here, this area here and all the area here, the 4160 seem to be a very, very pivotal level. Every time if the market go below 4160, there'll be some selling. If it stay above 4160, that's buying. So if I clear out more time, then let's take a look, right? You can see that there is something quite clear that this 4160 is a very important level to watch out for. So all I say is S&P 500, if it goes down to 4160, okay, 4160, likely we should see rebound. But if the market really loses 4160, then the selling can bring it down to the next few levels. All right. So we watch 4160 first before we actually go into details. All right. So that is the S&P 500 on the conventional chart. Look at the our own chart. Well, all looks good. Everything looks good. It's above it's between pivot 1, pivot 2. KSI is green. So today for S&P also looks good. So all looks positive for time being. So with all this positive in the market, right, upside still looks firm. So even though yesterday with some pullback, you just don't need to worry. But like I say, third time I'm reminding you, please put your SWL, all right, just in case, because you don't want to get caught on the wrong reason. Okay, I already say this my third time. I hope that you get my hint. All right, you just prepare yourself. Okay, let's look at the Hong Kong right now. Hong Kong is still moving higher, 29,080 now. Okay, Hong Kong, there is a chocolate bar right here. So likely you may even test this point just to finish out the chocolate bar at about 29,174 range over there. Okay. All right, for DAX, yesterday DAX, as I expected, DAX actually gapped up and then it come down. So for those who bought, those who have DAX, I told you, be very careful when you go to new all-time high. It's more to take profit. I hope that you didn't chase it, because if you chase it, it's out, right? Well, today we have the new MLP here. Now it's at about 15,534. The moving average itself is here, 15,300. So if you ask my personal view itself, right, as long as the US futures are still okay, doing fine, the DAX may actually recovers this morning, later on, and then cross the MLP to go back to a new all-time high. It is possible. But what is something that is not that nice for your information, for those want to hear me out? Oh, now let me just delete my lines first. Too many lines here. Okay, here we go. Now, you look carefully. This is something I don't like. Can you see that? This is what I see. Can you see a divergence here? You can see that the DAX is going upwards, right? But the RSI is not going that same way. So there's two take over here kind of divergence. Number one, it is because there will be even higher upside to 16,000 if the market continue to rally. Because that means that the next wave, the RSI may when you go up, right? As in people, the buying come in, then of course the DAX will go to 16,000 rather easily already, the next wave. But on the flip note, right, because the RSI doesn't seem to have strength to go higher, by moving in this fashion itself, right, it does tells you that the market must be very careful now, and the buying, although is there, but it's not as strong as it was previously when it was here. So the previous, when the market was doing this, you can see the strength is very strong. But now it's more of like, you can see that every time when the DAX, let me show you, when the DAX actually closed at the high, the next day, there seemed to be some artificial selling when it gap up to come down. It seemed to be doing this. It's more like push up to down feeling itself. And RSI is kind of like not following through. So that is the concern that I have for all the DAX traders. So it's good to buy cheap, but you must be careful to chase when the market is running above up already. So that is my view here itself. Hopefully you'll get it. All right, clear on this? If you're clear, please key text number 1 right now. Let me see you guys are still around. Okay, thank you. All right, so that is the take that we have on DAX. Okay, so let's check one time. China A50 is still down. Interesting, because Hong Kong market is still okay. Oh, Hong Kong pulled back a little bit already, but okay, let's see how it goes over there. Okay, all right. So I've covered all the U.S. equity market. So now let's just look at the commodities market right now. Okay, gold, yay, gold, yes, all the way. All right, yesterday gold basically one singular direction above, all the way above OP, just all the way up. So now the thing is this, I keep on want to share this with you. I'm not trying to boast my trumpet, but I am very bullish in gold. All right, and I believe that gold the next 6 months will hit the high of 22.18. So which means that today is May, right? Today is a May. All right, I believe that May till December this year, 2021. Today, May is about 1,900 on gold. I suspect that by December, we should see 2218, which is the all-time high level. As in, it will be new all-time high lah, new lah, so-called, not all-time high, new all-time high level. Okay, which means that no one have ever seen this before, but I'm calling for that. Now, of course, I know a lot of people calling for 3,000, 4,000, 5,000, 10,000. I'll leave it there. I'm not here to do marketing, but I believe that if you actually utilize this properly, you can actually make a bit of money here. So I will say that, right, we will see several CCRYs that will get bigger in range very soon. There will be about 10 to 15 CCRYs on the day chart. And all you need to do is just to utilize it properly and make as much money as possible from the day chart and the intraday chart. Because if the trend is up, right, then intraday, you just have to buy based on any CCRY. So you need to do that. So if you want to ask me, Cal, is there anything that you guys really need to subscribe with Ben? It's gold. I'm not kidding you. Subscribe gold for the next 6 months. I'm quite confident to tell you that you will make very good money out of gold. All right, this is something that I must tell you, okay? All right, so that is what my first take is this. But again, now the gold price is at 1,009, right? At 1,009 here. I kind of thinking that, right, maybe we should just go slow. And if there's any profit taking, let it come down. And then after that, there will be a base somewhere, I don't know where. And then after that, there'll be another uptick again. You got my point. So as long as we keep on doing this on a periodic basis, we should come out very positive by end of this year. And I'm quite sure that people like Arun, myself, M Trader, Cynthia, Bridget, and all the lovely gold trader like Josephine, you guys will be definitely into doing this. All right, this is where you're gonna make a big money right now. So you do not want to lose out on this. Okay, let me explain to you when it comes to the technical point in the conventional chart very shortly. Okay, so overall itself, we can see now is that now everybody is saying that okay, gold may catch a breather at 1,009. Okay, now they're telling you, hey, relax a little bit. And they say that, right, later on, gold may go even higher. Now, this one from Kiko says that gold will go to 2,200 before coming down. Okay, so somewhere near to my 2218, something around there. Okay, so let's see yesterday's gold. Let us go through and go back to what you learned from us. Okay, now we know that the last 5-6 days, gold have been really doing this. Wow, 5 days, it's been like up, down, up, down, up, down, up, down. Very tiring, very, very sideways. But on hindsight, do you notice that the KSI is green in color? Yes. So the boys have been buying and buying. That's very important. Now at the bottom, do you notice that there's no blue bars? Which means that, right, there was no selling pressure. There's only buying pressure. Just that they tried to bring the price down a little bit to throw you off the curve. Now, what is more important, if you look carefully, again, the market is above the RL for a long, long time. There is no downer throughout the last 10 days. So that is another. Last one, the most important one is this, my friends. Do you not notice that this is a BNB, right? So when the market bridges the BNB, that was where I tell you before, when the market breach the BNB RL, it will go higher. I think Sister Cynthia and some of you have spotted that, right? And of course, you look carefully, the last 5 days, the market have been going up. Last 4 days, the low keep on going higher. But yesterday, the boys purposely break the low. But you must understand, the KSI is green. Now, if the KSI is red and it breaks the low on the uptrend movement, right? Usually, there'll be more selling. But when the market is on an uptrend basis and the KSI is green and the market purposely break the low, then after that, it reverse up, right? Well, I tell you, that is a die must buy already. That means they purposely trigger the stops at the bottom and then causes people to cut their losses and then go up. Do you agree with my sharing? Right? If you agree, please key the word agree. If you disagree, key not. And more important thing is that when the market crossed the pivot too. Now we know that yesterday is an inverse pivot. So basically it's right. Inverse pivot means that when the market is actually containing you in the middle, the buy sell will be very heavy, up, down, up, down, up, down, up, down, right? I told you before, the market will be doing this up, down, up, down, up, down, up, down, right? But I did say already, once the market break above the P2 in the inverse pivot, I said this and I said this several times, the market will go up. And especially if the KSI is green, the market will definitely go up. Do you remember this? Right, if you remember this itself, right, please key the word REM because I did it on Super Tuesday, which is yesterday. I also do it on Monday during MAO. Do you remember that? If you remember, please key the word REM right now to take note of this. And next time, if you happen to bump into this again, you will know exactly what to do. You know what to do for yourself and you will remember that. Okay, so when the inverse pivot is there, we have this bouncing effect because the both sides are magnet. They're trying to pull it towards them. So that's why you see this very unhappy momentum whereby you just buy also wrong, sell also wrong. But once the market has gone into one direction, why is that so? Because it's a doji. You see that doji, we have several dojis, but the doji is still a doji. So once the market decided to go into one direction, that's it. That's why yesterday when gold was about 1891 or 92, I said that gold will hit 1900. Why did I give that number? Was because I know that yesterday was a doji, the day before was doji. So if the golds go up, right, then that means that it will close near to the high. Because I told you before, normally it's a doji day. Prior to that, the next day there will be a directional day, and the directional day comes where it breaks above pivots on the right. The market will likely close at the high based on that. Vice versa, if it's the other way around for sell. And you look at it, this is what exactly have happened yesterday. So gold, very naughty. You can see it went sideways first. Then they created this BNB. Straight away, the market went down and break all the stops that was from yesterday's low. Okay. Then they break ready. What they do? Look at it, how devious they are. The KCX blink already, right? And then you can see the KSI jump. The KSI start to jump already. That is very the thing to do. And now watch carefully for those of PTP students. Do you notice that there is a TSCB right here itself that was created based on this day and this day, this bar and that bar A and bar B. All right, so what happened itself? Straight away, you know that any color change, crossover, right, will be a very strong buy and sell. So the market basically went up first, then it came back down. Then after that, it went back up again with a strong big bar. Now, I told you guys before that if a strong big bar come in, if the market doesn't collapse it back down, right, there will be some artificial buying soon. And truth be told itself, and you can see the CCRY and the TSCB was online, then the market keep on toying, because you know why? It's still below the P2, because P2 and P1 is an inverse pivot. So it's basically pushing it down and the one at the bottom attracting it. So it's just stuck in the middle. But the one that changed everything, can you see that, guys? The one that changed everything is a BNB. So when the boys are ready, you go with the flow. When the boys are ready, you go with the flow. And truth be told, what happened? CCRY, BNB, crossover, break P2, wow, all the way. And of course, CCRY, you can see that the power is there. So the KSI, you can see that conventional indicator will call you to sell because if you're at a high level, right, conventional indicator, you don't do that. The KSI is tell you the boys are still there, you stick with the game plan. That's why I do not use conventional indicator with TWB system because it will actually throw you off the curve. It may help you occasionally to sell the high and buy the low. But if you don't understand the trend of the market today, you will think you will actually sell because RSI is at the high and then you will actually buy when the RSI is at the low. So you have to use conventional chart correctly to help you with the TWB system. Then you can have the full package. All right, guys, if you understand this itself, right, please key number 3 right now. It means that you really understand that how you have traded gold yesterday based on my explanation. If you understand what I say, please key number 3. If you don't understand, then just key the word not. That is, at least I know that where are we standing right now. So don't you find that the BNB is really very good? Whenever there's a BNB, you will know that what to do with the market and you can actually profit from there itself. Cool, right? Okay. All right. Got it. Excellent. You guys are great. Okay. So we have done our recap on gold. Let's look at the market right now. China market is down still, but have recovered off the lows. Hong Kong is still pretty strong at the moment. Hong Kong still going up. Likely will test the figure that I mentioned, 29,174. There's high chance of doing that. All right, let's look at the gold price right now. Now gold is still going up. Wow, 1903, high 1904. Excellent. Okay, now the thing is this. All right, so what do we look at gold? Let me bring the chart back to you. Now let's just recap throughout the whole gold movement. Okay. Now remember gold movement, right? Let me just do this for all of you. Let me just take away everything for you. Okay, I bring away all the lines first. I utilize the line. All these are different colors. So it stops me from doing. Okay. Oh, shit. Okay, so look at the gold chart. Now this is the entire gold chart. Okay, entire gold chart. Okay, so this is the entire gold chart. Now we're going to do it very slowly today. I'm going to put a bit more emphasis on gold. Wow, Hang Seng has just breached new level. Wow, bang. See? Wow, really hit the chocolate bar. 29,190 level. You see that? Live, really live. So I told you guys, really don't fight it for time being. How's Hang Seng? It's above the pivot 2. KSI is green. It's a KSI jump. That's why you see Hang Seng is going up. All right, so that is the thing here. That's why you have to follow rules. Okay, sorry to divert a bit. Let's back to gold. Sorry. Okay, so let's just look at the entire gold chart first. Okay, now you must understand that when gold started in 2019, it crossed a moving average MA30 and MA200. That's where gold really goes up. Very nicely all the way, as long as it stays above the MA200 and MA30, gold basically went up from 1,003 all the way to this point of 2,000. Okay, so the main thing is MA30 and MA200. Okay, then I thought we have seen this. We have seen that the market coming down. It broke below MA30 first, then it has some artificial support exactly at MA200, and then after that itself, right, it basically toyed around this area here, and gold kept on coming down. So one thing is that at that point itself, when gold price was at about 2070, many people called for buy, and of course when that happened, gold came down all the way. So this tells you about this whole thing about when everybody's on one side of the world, you just need to be very careful. Okay, got the idea now? Okay, now I want to show you something important. Watch this slowly with me. Now, as I told you for Fibonacci, I have a way of drawing my Fibonacci line as a rule that I have, is that the entire cycle itself, right, cannot cross more than 61.8. So in this case, this one crossed more than 61.8, so the starting point should be here. All right, so from here itself, I drag. You can see that it didn't go below 61.8, so I can leave myself again, leave again. So you can see that as long as the market do not go below 61.8, I keep on drawing. So if I draw it all the way to the highest point, which is the gold high, you notice that, look at it, this is how beautiful is this 61.8. Look at it, this is incredible. If I want to really put it in a way, to be precise, you can see this, I can do it here. It'll be no difference. You look at it, the 61.8. That's why when gold came down to here itself, we did say that if gold can come any lower, it'll be the best time to buy already. And truth be told, on the hindsight, we technically missed this bottom because we thought they would go lower. Too bad. So now gold has went all the way up already. Okay. So now, is that time to be worried? No. In fact, you should be happy. Why? Because you can see gold cross over the moving average 200 and now it's above MA30. That's why when gold crossed 1800, I know that gold will go to 1900 and really it all has happened. Okay. This is not bullshit because I go back to my past sharing. It's like that. Now today I'm going very slow motion with you. I want you to take note of a few key points here. Okay. First of all, you look at the RSI. Now the RSI conventionally, you can see that usually above 70, we should look for some form of resistance. But you can see for gold, 70 is not the usual common factor. Although there was one here, but the actually is more upside. So if we look carefully for gold, all right, around here itself, that is usually the main point of reversal. And that's about 81, around 81, 82 level that for gold, okay? So this is the number that I take note. If the gold do push up to 81, 82 on the RSI, then I don't want to chase anymore. I'll wait for a while, okay? All right, now that is on the RSI ground. Now you look carefully at the bottom. Do you notice that the RSI, whenever you hit about 33, usually it will stage a rebound. Almost every time at 33, okay? So I'm going to give you the first thing that you must take note. If ever one day, gold come down drastically, whatever reason that can be, go to 33 on RSI, I would like you to look to buy gold. Can you write it down? RSI 33. RSI space 33. I want you to focus and remember, if ever one day, if RSI hit 33, I want you to be focusing on buy. Right, I'm going to go very slowly on gold today. I want you guys to really, empower yourself to this Vesak day some more. I want you to really remember this, and I want you to know that today, on the 26th of May, even though it's a holiday, I'm here talking to you and making you guys richer when things come. So when RSI hit 33, please take note of that. Okay, RSI 33, first thing. Now, second thing to take note of is look at it. You can see that the market really pulls back down and hit the 61.8 itself. So by logic, it will rebound, go back up to the 23.6 level. All right, by logic, okay. So if that is the case, the level to watch out for gold will be somewhere around here. Okay, I'm gonna just try what this. Wait, Jimmy, if you're around with me, can you just tell me again what's the steps? You say I put a dollar sign in front, correct? Put the dollar sign at the back or the front, I can't remember. Can I put? Hey, can I put it? Hey, can I put? Did I get it wrong somewhere? Zero percentage. Okay. Okay. Hey. What am I doing? Under description. Yeah. Okay. Equals to percentage. Dollar. Okay. Like that. Okay. Okay, thank you. All right, thank you very much. Thank you guys. Okay. So we get a number now, precise number. Okay. Around there. Okay, so that means, thank you guys, thank you, appreciate it. This is how the power of family is. Thank you so much. Okay, so you can see roughly now that if gold is to go up, The first challenge will be about 1925 level, around there, 1925 level. So gold has the potential to go to 1925 based on what we're seeing right now. But as I said, the RSI now is near a high level, right? So we do a bit of forecasting. That means that look at the 38.2 level and the moving average 30 is somewhere near there. Okay, all right, you can see that. So if the gold price is to pull back, if we ever put a pullback, all right, then, then the market may have to come back down to this point here. And this point here, likely it will be around the moving average or below the MA 30 and about around MA 200 level, which I suspect that it will happen now. So yeah, indeed. Okay, so I'm going to do the same thing for the FIBO again. Okay. All right, thank you, Richard. Once again, thank you, Yuming also. All right, so you can see right now that this is how it looks like. Okay, again, because I can get the high and low, but the idea and the concept is something like that. So which means that, right, if gold price is to come down this wave, the gold might have to come down to approximately 1834 level. And when that happens itself, right, it will likely bump into this tool. Now, you see, I'm not doing just Fibonacci. I'm actually doing a combination of Fibonacci, trend drawing, support resistance, RSI, and of course, conventional wisdom in terms of the TA, combining all together itself to explain this to you. All right, so all these numbers, why I don't, carve in stone, because, the market will always still move. So you cannot be precise. It's roughly there. So if the gold price do pull back for whatever reason, 1834 range will be a very critical level, and that is where likely the MAs will meet each other. So if you ask me itself, right, I will put a call level, all right, around here. Call level means that you put on there to remind yourself if the gold go around to 1834 level to remind you. Now, normally for gold, every $50 is a barrier, right? So 1900 have just crossed. So logically, the next level is 1950. But apparently, itself, the midpoint of them is 1925. So 1925 itself at this 23.6 seem to be about the same level. So by mathematics right now, the thing is this, 1850 is slightly above 1834, right? So you can put a call level at 1850 first. Then as it goes down to 1834, you must take note. Now, what is going to be very scary and what you may make a mistake is that when the market now going up, right, you ask me, Cal, can buy or not? And I tell you no. Then after that, gold may go up a few more days, you get unhappy with me. All right, it's the same thing like Dogecoin. When it's 20 cents, ask you to buy, you all say no. Hit 40 cents, ask you to buy, no. Hit 60 cents, I say go slow, you buy. Hit 70 cents, I say don't buy, you buy more. You understand? Then after that now, right, Dogecoin coming back to 25 cents, I say can buy again, you say no. You understand my point? So likely this will actually happen again for all of us in gold trading. I kind of foresee that, right, later on, when gold price comes down, goes down to 1834, right, the whole sentiment with us will all change, and you will think that the gold may go down further. So I'm going to write it down here and the recording for 26th of May today to tell you that if gold pulls back to 1834, that particular point is actually a very good deal to buy into gold. You understand my point? Yes, I think so. So if you look at it now with this drawing all clear, now people have been saying, but Cal, if you look carefully in the drawing of gold, I say yes. If you look carefully, Cal, the high and the high of each wave is getting lower each time. So if let's say you are right, let's say it's somewhere around here, then isn't that means that the gold price will come down lower to here itself, to where Richard is saying 1,600 level? Well, it's possible. Based on the lower high formation itself, channel drawing, it is possible. That's why it has to be based on whether or not the fundamental agrees on this. But knowing the fact that Federal Reserve itself, right, is going to do a lot of pumping exercise whenever things goes wrong, it's kind of difficult to suspect that they will not pump if the market needs it. So if the gold price do come down all the way to 1,006, lower than this, because why? Normally, you look at it, the high here at A, the low is B, then of course the subsequent high, then after that you have the C highs, then you have D, then you have an E, then you have F in a way. So that is the reason why I say that, right? If based on chart drawing, F will likely go to the next number, next thing is G. G will be a lower level than E. That is by logic if the market really comes down. But if the thing is that the RSI, by the time it comes down, and the RSI hits 33, I kind of suspect by the time it reaches to 33, it will not be at G. Most likely, it will be somewhere around here, which is my point of X. You got my point? So I suspect that, right, this time around, right, if the RSI go to 33 and the market hit X around the area, X area, this will change the entire trend. Because that means that, right, the RSI now have changed direction. And the E to X, the low got higher. When E to X, the low got higher itself, right, usually once it break F, it will go all the way to the all-time high already. Can understand this? Now, this drawing itself is meant for the next 6 months. All right, next 6 months. So that's why we have to prepare ourselves mentally and psychologically to prepare for this. So the next 6 months is about this. All right, this drawing here. If you like this, yeah, correct, Yuming. If the market change trend, that's why I believe that there will be one more wave down to go back to 33 for RSI again, maybe, as I say, and likely from F, it may go down to X. And that is whereby I kind of suspect that it will meet the 2 moving average, and then it will cause people to panic. And after that, right, you will lose track of your idea. Then after that, you may miss the last chance to catch this bull wave. Okay? If you agree to what I say or you like what I draw, please keep agree or like. If you disagree or you think this is not what you think so, you can key the word not. All right, let me see what is your view today. Like I said, today I'm spending a lot of time on gold because I'm, very interested in gold. I also make my money in gold before, so I know this guy, how it works. And I did tell you guys when it compressed in gold, I know that the gold is going to play punk already. And truth be told, it already happened. Okay, wow, good to see Yuming agree with me. Yuming, our side bet is still on, don't worry. Yeah? I would love to lose this coffee to you. Wow, Richard also agree and like, wow, I got validation from a top trader. Wow, good. Double bottom at E, probably base has formed, GME. Yeah, it's possible. It is very possible. Looks like. Okay, thank you guys for actually agree and like. So I also will remind myself to do this. So let's just hope that this all will come true. But like I say, the most important thing is when we reach X itself, don't panic, okay? You know it will happen and you want it to happen. That is more important. Okay, so that is the gold Fibo figure right now. Weekly chart wise, you can see very cool. And now it hit my technical level. I did say that gold will hit 1903. It really has happened. Remember, early start of the week, I already tell you gold will hit 1903. Last week I tell you that gold hit 1903 and it has already triggered. So it's time to take some profit. All right, gold has hit 1903, which is the weekly chocolate bar, already trigger. Please take some profit. Okay, please. TP, okay, by doing this, cannot run away already, okay? So which means that please guys take some TP from here, don't chase, go slow, okay? Go slow. You want to buy? Can, just go small, go soft, okay? Go soft, S-O-F-T, all right? Okay, huh? All right, silver, well, silver will still be going up soon. So silver, if it's pulled back down, likely it will do the same thing. If silver is to pull back with gold, I suspect that silver will come back down, right? It will basically come back down to here. And that will be a lovely time to pack the silver in again. So around here, 25.90. Now silver is at 28.55. Sorry, 28.15. So if silver pull back on gold, if I say gold also pull back according to plan, then when silver hit about $25.90 to $26, silver will be a good time to buy. Now at $25, $26, right? I kind of suspect that the silver may go to $50 again. I repeat myself. This is the first time I give a silver prediction. I kind of suspect that silver may go up to $50 again. So of course you may say, Kel, that makes sense, right? If I buy gold, I only make $300 upside. If I buy silver, I make 100% upside. Isn't that silver better? Well, by ROI, silver is better, but in reality itself, right, the demand for supply is purely speculation. The only thing I told you before, right, that silver is in the demand is because Joe Biden, he has a lot of green infrastructure plan and all the solar panel. There is a little bit usage on that level. So of course, if Biden really make a good chunk of people actually go into solar, right? And also example like Elon Musk also like do this green infrastructure. So maybe itself, right, there could be a sudden spike in the demand for silver. So silver could be one. So actually we will be rolling out our silver TWB indicator very soon. All right, I'm almost there already. That's why I'm able to do this event on the 19th of June itself, guys. So watch out for the silver indicator, and if you can use it with gold, I can tell you this: the next 6 months you can do digital gold like Ethereum, Bitcoin, then you do the real gold and the metal like silver. So these markets, the next few 6 months, right, it's all about these metal products, or we call it fire products. Okay. Yes. Now at the moment don't have yet. I'll be ready. I already been testing this for the last 3 months. All right, taking off my time to do that. So yeah, I think time is around there already. Okay. Yeah, focus on gold first, of course, definitely. Yeah. But silver and gold are moving in tandem now, almost identical. Okay, all right. So how about gold today? Sorry to deviate so long on do the gold today, but I think that is a cool one. Okay, so for gold today, well, the market is now back to normal pivots, and it's now trading above pivot 1. So ideally above pivot 1, above OP, CCRY is a buy. So KSI is green, no blue bars, all is good, right? So it looks good. Now I want you guys to take a look some more again to do on gold, okay? Okay, Brian. All right, now look at it. When you notice here, slowly, everybody take a look. Now you notice this KCX here. Now watch this KCX over here. All these are the last few KCX on the gold chart. Now, can you notice something very important? Do you notice that whenever the KCX is there, you can see for gold, watch this carefully. The gold did go up after a CCRY, first wave. So A was okay. Then of course the next one, B was okay. Then C was very okay. Then D, not that okay. Then after that, this E, not that okay. Then here, not that okay. Then here, start to be okay again, which is D in a way. So what do you see over here? That E is doing okay. Now, what do you see here from A, B, C? Then not okay, not okay, not okay. Then D, E, okay. What do you see from here? So what have you learned from here? Let's just have some interaction here. So what do you think? What is the thing that you can learn from here itself? All right. Wait for your answer. Okay, so indeed, you mean 3 okay, 3 not okay. Okay. You mean it's always a joker. Okay. All right, I think the answer that I like is what Judy has written. Downtrend, not okay. Jimmy also say that KCX usually fail in downtrend. So indeed, correct. Yes, indeed. Liu, you got it right, spot on. I'm waiting for F to come. Yeah. KCX from day one, we already tell you, John, you're right. Anthony, you're right. So we already said before, right? In the market itself, KCX is meant for bullish market. And when it doesn't work itself, right, you should be very, very careful. That's why you notice that since January until March, I never really emphasized on buying on gold. Even for our 3G group itself, right, I also tell them, say that must take fast profit because that is a problem. When I see that, right, the market itself, right, is not doing the same thing or the normal thing, we know that, right, in terms of pattern, it will not happen. And truth be told, these three axes, all right, these three axes, right, if you have bought it, you will make some money, but if you don't get out in time, you'll be hit. So now you can see for us itself, right, on the D and E, things will get better. So that means if we're talking about further future sake, if any time if the market pulls back and go to F again, right, I'm going to remind you guys, don't panic. Really, don't panic. If really another KCX come down again, that will be the time to really buy into gold. Can you understand my point? Because I said this before many times, and it happens, and this is the same thing. So now if you understand this, all right, I'm going to clear my screen, and I want you all to look at what happened 1 year ago. Now, 1 year ago, M Trader, I think based on gold itself, she easily has made $1 million. All right, $1 million, right? So let me now do this for you. Today is Vesak Day. I really want you guys, so you're at home now, you have time, right? I want you to see what happened, okay? So everybody take a look at gold again. Now, this is gold shooting through the rocket, right? Shooting all the way up itself, okay? Right, so now everybody take a look at all the KCX again one more time. Look at it one more time. These are the past KCX that is available back then. Now, again, you take a look at the chart again. Okay, take a look at the chart. So here you go. CCRY, if you buy, you may make, you may lose. So you may make, you may lose. CCRY, if you buy, likely itself, right, you will lose. Then after that, CCRY, you still lose. Can you see that? Because the market was on a downtrend. Okay? But once the market pick up song, whereby you don't lose, you start to win. Then after that, even the most drastic pandemic, whereby everybody say it's time to get out of gold, if you believe it, wow, look at it, wow. If you trust it again, you have one more opportunity right here. Can you see that? So this is what we are actually seeing right now, and potentially this could be coming soon. This area here. I repeat myself, this could be the potential thingy that I kind of suspect may come again. Can you see that? Now, how many of you can see this one now? You can see, please key the word yes. Now today, like I say, I'm really giving you a lot of stuff, and FYI, gold is not even higher, 1905 already. Congratulations for those who have been buying gold. Congratulations, well done. Okay, so now you understand why it's all right. When the market comes down to F later, you have to be very careful. Now to wrap it up for this one, you see this one, you sure love it, okay? You sure love it. Okay, I insert the normal indicator like RSI again into the chart. Can we get a bit clearer for you? Okay, now look at it. Before the huge run over here, the RSI reading, the highest point is somewhere here, right? Which is around 82, right? Around 82 level. All right, where we saw 82 level. Okay, now we have moved all the way back. Can you see it now? Can you see now? If we bring back into current level now, remember, you can see that, right? The 82 level, every time when the 82 level pulls hit there, there will be all the things. So from 2014, right, when the market RSI hit 82, there will be the point of peaking. And after that itself, right, we still see gold pulling back. All right, about 82 level. Now we're already at 77. Now RSI at 77 itself is very high, but you can see gold is not holding, it's not going to stop here, it's still rising, right? So that's tell you that there's a lot of shoring in of funds trying to push and push and push. And usually this pushing itself is to fake buyers go in and they get caught at the top, and that's where they get hit. So we don't chase right now. If you want to trade gold, do the CCRY, you can trade, no problem. But you tell me, say, Cal, I want to buy gold now and keep for long term. Please don't do it right now. You are now at a level of very dangerous position. Don't do that. But if you look back into history, which is whereby I just tell you about this area here. Okay, I'm going to go back to that area again. Remember this area? This area here is the one I showed you earlier, right? After gold shoot up all the way, it hit to about 82 level. Sorry, RSI hit 82. Then after that, gold pull back. Now that was during the pandemic time. And pandemic time itself, right? Logically, we should buy gold to protect ourselves. No, the equity market was coming down, and gold price also come down at the same time. So that is whereby when this was coming down very fast, many students was asking me, Cal, can they short gold? Can they, short heavy gold? I keep on telling them no. And in fact itself, I tell them it's a time to buy gold. And I tell you this, M Trader bought many gold around this area. For the PTP student, she used this KSL to buy around here, remember, about 1450 level. And then after that, of course, you can see very clearly, did the boys give us a signal to buy? The boys did. How did the boys signal you? Look at it. What do you see? Can you see this, my friends? Do you see the boys give a signal? Yes, the boys gave a signal. What signal is that? The BNB signal. The market did a BNB on that day. Now you see throughout the selling, there were not a single BNB. But the day they want to bottom out in a way, they BNB the market. And that is why I tell you guys, when you see that happening itself, you know the boys are in already. Correct, exactly, Liu. We need a pullback, and that pullback come in. I'm very fearful that many of you will lose track of what I've said today. And that's why today I spent such a long time, almost 30 minutes to talk about gold, because I know that this is going to be a big one for you. And I want all of you to make money until the end of the year. And this is with the main project for us for the next 6 months. I want you guys to make a lot of money. I don't want you all to miss this trade. All right, because I tell you this, once this is over, that's it. Nothing else already. I got nothing in my mind after that already. So if you look at it now, when it hit 82, that was where the gold pulls back, right? So that was back in year 2020 in February period. So where are we today? We are almost there again. History is going to repeat itself. It will happen again. And that is where people are swarming in now, because they look at all the CNBC, all the Bloomberg writers, all are saying the same thing. But if you notice this, yesterday is already a BNB. I repeat, yesterday is already a BNB. So very critical, very simple. Today high will be a very important support. Today high is going to be a very important support. And today high is interesting. Sorry, yesterday high is 1900. It's a psychological level. So die gold today must stay above 1009. Must stay above 1009. Because if gold doesn't stay above 1009 and drop right, maybe that is the point already. So you be very careful on that itself. Okay. So watch out for 1009. Now, of course, gold can go a few more days to reach the 82 mark for the RSI. It is possible. I'm not saying it's not enough. Please do not short the gold right now. It's too early to do that, okay? I'm just saying you to buy, can buy, go slow, go soft, all right, of expectation. Then after that itself, right, if the gold break below 1009, stay out already, okay? Because that's a BNB, unless a new BNB comes up again. So this is very critical for today. Please remember that I really want you guys to be very rich by end of this year. This is my main objective for spending my time in the office on the public holiday, because I see and I know, and I saw the group chat yesterday, Go group chat, more than 200 messages, and everybody is gearing. And always when I see this gearing to all of you guys, wow, go lah, wow, crypto lah, when you guys are all coming in and the group messages go more than normal, break the moving average, we know that trouble is just around the corner. Do you realize that? How many of you realize that itself? Whenever any particular group chat of ours breaks normal moving average of messages, we know that trouble is just ahead. How many of you agree with that? If you agree with that, right, key number 8 right now. If you agree that that is what always happens, please key number 8 right now. Hey, y'all must agree, no? Don't just type number 8 for the fun of doing it. Y'all must agree. Really agree, right? Whenever you see a group chat is full of wow on a particular group itself, right? Do not agree. Oh. Okay, Yu Ming, as usual, steady. Okay. Anyway, I have seen this enough time. As your host, I can tell you this, it will happen. So now gold is up, right? Everybody looks to buy gold. Then after that, when gold down, I will see a lot of casualty. A lot of you will be hit. Then after that, you get upset. And again, the whole thing will just go back the same way again. So today, I'm saying that, right? Gold will still go up. Don't quote me wrongly. As long as 1,009 hold. But if gold do break below 1,009, go soft, go slow, all right? And wait for the F to come in, which means that let the market pull back down. And when that happens itself, all your friends around you will say, gold is lousy, don't buy and stuff like that. Please tell yourself, you heard today, you know what you heard, you just follow through, okay? Just do your own, risk management will be good enough. All right, thank you once again. All right, guys, I hope you guys love this session today. This is my longest session on gold, but I think this is very important. All right, so that will be first part of MAO. Today, you have a long run. MAO is 2 hours long, I'll tell you that. Okay, so you can actually leave now if you don't hear the second part of the MAO, but I think that you should. If you have your equity market position, please listen to me. Right, 15 minutes, all you need. Listen to me. At least you can have some guidance on this. Okay, all right, ready? All right, I'll give you 15 seconds. All right, to rest a while, get a drink if you need to. I'll come back in 15 seconds to do the second part of the MAO. Okay. Okay, let's just continue on the second part MAO. It will be a quick one, don't worry. Now we can see that the overnight reverse repo operation has went up one more level again. Today it hit $433 billion. All right, if you don't know what is overnight reverse repo operation, you go to yesterday's and the day before MAO. I talked about that already. All right, in short itself, is a very clear backdoor tapering. Backdoor tapering. So that means that, right, the market is actually trying to hold back liquidity availability in the market. That is the reason why I am expressing my concern. But again, but the thing is this, on one side, the Federal Reserve is doing overnight reverse repo, but they are still doing buying at $120 billion on the regular market per month. So it's a very interesting way they're doing. It's just like you take back your money from your friends, but you still lend out money to your friend. So it's not a very silly thing they're doing. But of course, that is to control the yield curve. That is the thing here. So one side they are pulling back, one side they are actually giving it. So that is how the Federal Reserve is doing this game. That's why the stock market now Still won't come down now, but you have to be very careful already. This is no joke, by the way. So you can see very clearly how we can see in reality that Federal Reserve balance sheet and US Stock Exchange composite is really the same damn thing. Look at it. It's the way they're moving itself. Look at it. Oh my God. It's almost identical, but the macro data is getting bad. So you can see that the data is actually going away from the market. And actually, if you look carefully, every time when the data move away, the market will pull back. But this time around, the market hardly do that. So once again, it tells you that the money is the one that's holding the market relentlessly itself. So again, the moment there is some movement by the Federal Reserve, things can change dramatically, all right? Now, the thing is, of course, I've been talking about Cathie Wood, right? I think Cathie Wood is really must be very upset recently. Now, Cathie Wood, they bought into Virgin Galactic, all right, quite a bit, right? They bought a lot, in fact. So you can see that, right? They've been buying. And the moment they dump away that counter, wow, the share price shoot up by almost, by quite a fair bit, in fact. So why is like that, right? So it's like up by 73%. So because, I don't know what is it, but it seems that she's in the wrong side. So she lost a blistering rally. All right, the market went up in 3 days, 28%, okay? She had been buying at the high level. Oh my God. She bought during the February high. She bought here. Oh my God. She's where she bought in 1.7 million shares at the 100 million worth. And then she sold them here. She sold them on the way down. So in short itself, right, probably they know that she's in, they don't want her to benefit, or she's now on the wrong side. We call it off-sync of the market. So this is where it gets a bit scary. And again, people will watch this carefully. So those who are on ARK Innovation ETF, right, be very careful on this, okay? Then, of course, sorry again. I forget to do this. Right, you can see that now, you can see bets against this is from Bloomberg. All right. Now, Bloomberg says that, right, there are bets against, not for, against 357 billion S&P ETF. Wow. That means that, right, there are people increasing wager against S&P by shorting the world's biggest exchange traded funds. So as much as $357 billion is shorting the market. Either it's a hedge position or it's an outright short, we don't know, but it seems to be there in the market. Look at it. This is the whole movement now. The S&P 500 is going up, but the white one is on, and the short interest is also going up at the same time. So you can see over here itself, of course, they may get it wrong at times, right? But of course, when they are not shorting, the market relatively goes up, right? So it's very clear. So this is something that you must understand, that when it was back in December last year itself, the short was huge, but when it reduces it, right, the stock market rally. So now the thing is that the stock market is up, but the short amount is also increasing. Now, yesterday when I thought that the short amount is increasing, some of you was actually asking me on the site, Cal, can you show some hard facts and figures rather than just saying? So of course I dig out for you, I paid for Bloomberg, and now we have it, okay? So guys, please be very careful on this itself. I'm just informing you, I'm not insinuating anything, but when everything hit a point that someone must break. So we can see very crazy stuff over here itself, right? So of course, Steve Henrich as usual, rub it in. If we do exclude home prices, corn prices, saw prices, lumber, steel, and blah, 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 blah. Yes, if we remove all these things itself, there's no inflation. That is very true, okay? All right, but what is crazy is that you can see right now, right, the what they call personal income tax is surging, okay? But the corporate income tax is actually lowering. That means the corporates are not making, but the personal are making. Why? Because the stock prices is going up, but not the company earnings. Either they're going creative itself in the accounting, or it's very clear that the strong divergence is there. And obviously, it's all right. We are definitely in this so-called recession mode, but the market doesn't see that. So that's why when you see this thing happening, then usually when the stock market goes down, then of course personal income will also come down. And if that happens, there'll be a lot of liquidation in the market as a whole. Now, I cannot say that Liu, whether they're attacking Cathie Wood or not, I don't know, but it's very clear that, right, they're putting her on as a front line. And whatever she does is all right. There's a group of people, right, watching it very closely, and it doesn't seem to be helping her on the side. Now, the last one is the most important slide for you guys is this. Now, yesterday we had S&P going up, right? The ETF also going up, right? But the volume is very low. And the volume is actually so low that it's now is one of the lowest levels ever. All right, one of the lowest level ever. So for quite a while already. So which means that the market is going up, but the volume is not following through. Then who the hell is buying? That means there's only one buyer in the market, and that's Federal Reserve. So if everybody now is standing outside the fence watching the market, right? You have to be very careful already. I repeat, that means the boys are no longer in the system. Because they are in the system, the volume will be there. But if they are not there itself, that means that leave only all the people, the retailers are just buying and selling among themselves. And that is the reason why I need you guys to put your SWL first so that you protect yourself without getting hurt. Okay? Got my point? Of course, the vice versa is that if the market is going to go up, then the boys come in again. Yes, it will short the market to new all-time high. So that's why I say that the Dow Jones will have a 1,800 points rally or 1,800 points sell-off very, very soon. Okay, so I'll cover this more tomorrow. Right? Today is too long already. I won't cover more. So guys, I thank you for today. Apology for taking your time, almost 2 hours for this MAO, but I'm sure that you guys have benefited a lot on it. All right, till then again, guys, take care. Have a great day. This is Kel signing off. Bye-bye. See you guys. Bye-bye. Today, no afternoon MAO. Don't have. Okay, thank you. Bye-bye.